Hello, welcome to my market commentary. Today in America, there was the Producer Price Index data. You can see the Producer Price Index here. While it was expected to be 2.5% annually, it came out as 2.3%. So, it was lower than expected for the core index, while 2.7 was expected. It was announced as 2.6. So, it came out lower than expected. But these don't really have much effect on the market because, whether inflation drops or comes out a bit higher than expected, there isn't the slightest change in the Fed's outlook. No rate cut is expected this month. In fact, there's even a news piece on MarketWatch that says, the market has been wrong about the Fed for 3 years, and it looks like it's going to be wrong again in this 4th year. So, what I'm trying to say is, the market, about the Fed here, the interest rate, when it should have raised the rate, it acted slowly. If we go further back, during COVID, when it should have cut rates and injected money, when necessary, slow to act. The market really dropped a lot, and it made the market suffer a lot after that. It had to implement a massive expansion. Let's put that aside for a moment. But yeah, after that, it did its expansion. When it came time to raise rates, it acted slowly. After it raised the rates, then it was said that it would start cutting rates. But even then, it acted slowly, and only then started to cut rates. People thought it would continue gradually from there. But when it came to rate cuts, after a 75 basis point cut, it stopped again, saying no more cuts. They even said no cuts for a year. Since it was postponed to September, it means they haven't cut for a year anyway. And on top of that, they said so as well. So, the market was always wrong here. But actually, the problem isn't with the market. The problem is with the Fed. These expectations of the Fed stem from its inability to manage them well. Here again, the importance of communication needs to be emphasized. When I look at Bernanke, he once said that monetary policy is 99% communication. If you communicate well, if you provide good guidance, you don't need to intervene in the market too much. So here, there's a problem with the Fed, with the guy, and also starting the rate cuts, and then pausing for months after that. Makes you wonder if it was political, because this happened before Trump. And Trump won in November. And now here we are in July, and the rate cuts still aren't continuing. So people are questioning, what's going on here? So this is a source of tension for the markets, and it doesn't look like it's a tension that will be easily resolved. Now, should Hazek come, or should someone else come? There are questions about that too, and this will always linger on the sidelines of the market, like a splinter stuck in your foot, so to speak. It will always bother the market. It's something that will cause discomfort. So, why did we talk about all this? We're expecting a rise in the market, but there will always be things like this happening. Now, there were some pretty big drops in Davidson yesterday, but like I said before, it wasn't anything too important. Today doesn't look too bad either. At least that's how it seems in David's. David's isn't something we follow closely, but the S&P 500 is important for the market. It had pulled back from its peak, and you can see it hasn't really dropped much. We still like it. Nasdaq, despite everything yesterday, ended the day with a rise, and today, if you look, there's another increase. We still like the Nasdaq too. We continue to recommend it. It can be bought. It's investable. And especially, people keep asking me every day, should I buy? Every day, people ask me, should I buy today? It can be bought every day. Let me put it that way. This is our view on Nasdaq now. Now, another thing people are curious about is Bitcoin. So, what about Bitcoin? 110, 817. As mentioned, there was a support level, and that support, you can see it's holding there. Now it's bounced from there. I think if it breaks above 119,000, it can be bought. Right now, at 118,600. Look, it's passing through here. It's passing through 119,505. That's the moving average. So, even 119,000, even if it's around 119,500 or so, it can break above the moving average and Bitcoin can be bought. If you haven't sold, keep holding anyway. We already said not to sell here. And I told you to follow the 4-hour chart. When you look at these 2-hour candles, it's always like this. If one candle is down, you see another one is up. Right now, hold off, don't buy. Because look, on the 2-hour chart as well, the moving average, it still hasn't broken above it yet. It looks like it, but it hasn't. But that's not the case with Ethereum. We said it could be bought. You can keep buying Ethereum. There's resistance at 3,340 above. We like Ethereum. It's a buy. For Ripple, the 299 zone acted as resistance. Unless this is broken. We're not recommending new buys right now. Just hold Ripple. Keep going like this. I'm being asked about TLT and here as well. Let me explain our criteria once more, because it might not be clear. Look, this the US 10-year yields. As you can see, today there's a red candle. What do we say on the daily chart? You need to see 2 red candles, meaning for 2 days. You'll see the US 10-year yield dropping, and on the 3rd day, TLT can be bought. 2 days dropping. On the 3rd day, you can buy. It dropped 1 day, then went up the next day. What do you do then? It dropped 1 day, went up the next, but that rise is still below the starting level, meaning, let's say it fell from 4.50 to 4.40, then went up to 4.45, but that 4.45 is still below 4.50. Then you need to look at the next day. Is the drop continuing again? If the drop continues again, then you can buy again. Right. It's that simple. But it went up. Should I buy at the peak without even seeing a single day of drop? If you ask that, we'll say no, don't buy. It's that simple. That's the deal. The calculation, we've talked about these too. I've also talked about the American stock market. Alright, now let's move on to the gold-silver ratio. The gold-silver ratio is taking a bit of a breather here. It dropped like this. It came down to about 87. I'm expecting it to continue down to 84. But maybe here. It looks like it's going to pause a bit. So, right now, we said to hold on to silver. We said not to make new purchases. This 38. After it broke through, for example, it stayed above it for about 4 hours. Look, like this. It looks really good. So in a volatile environment, silver can be bought. Now we're saying to hold. 38.874 was our previous target. Now it's become resistance again. We're not recommending new purchases in gold. Gold is going up to 3,365. And then, right now it's coming back down. And this pullback is important. Why is it important? Because just now, I opened Bloomberg. Look, this is about Israel, hitting Syria, and it shows here that they struck military headquarters. So tensions are rising. In an environment where geopolitical tensions are increasing in the Middle East, gold remaining weak, coming down from its moving average like this, coming back down, shows that things aren't looking so good. It shows the situation in gold isn't great. And that's all for today.